Hi, everybody. I'm Pam Kruger. I'm the founder of WealthRamp, and I'm the co-host of Friends Talk Money, the podcast on PBS Next Avenue. And for anybody who doesn't know, wealthramp.com is where you go when you're looking for a rigorously vetted financial advisor. And these are advisors who work only and directly for you. They are not earning commissions. They don't sell insurance. They don't sell any brokerage products. So when you do want an advisor and you want to know that that advisor is legally bound by the fiduciary standard 100% of the time, wealthramp.com is your go-to resource. And by the way, we're the only website that I've ever even heard of that doesn't share your personal information. So you have to be the one to choose to reach out to an advisor when and how you want to on your terms. So I'll just want to start off by saying this is a recap of the event that we did the other day. It's our second Wealth Builder series. And this video that we do every month is a live event. This one's not live because I'm recapping it for you. And I promise, when you do come to these in the future, we'll always have engagement. And like in the live event, we always have the questions that we get from you. But today, because it's Valentine's month, we're going to shine a spotlight on the biggest money mistakes that people make during divorce, because they're huge. And we want to help you avoid those. Now, oddly enough, did you know that February, in addition to being Valentine's Day, is also divorce month? And that's because it turns out that more divorce filings happen. They spike at the beginning of the year. So February tends to be a big one. That's how it became known as divorce month. The truth is, though, that we know that relationships are complicated enough. And then you add on to that the financial life that exists throughout a marriage or just living together. Uncoupling can be traumatic in every sense. So it's no wonder that the financial details can get lost in the divorce process. And that's why I've asked financial divorce expert Lorraine L., who's one of our advisors on WealthRamp, to walk us through these biggest mistakes, these most expensive mistakes. Lorraine is CEO and founder of Better Money Decisions, and she's one of the certified financial planners in our network. Who is accessible to you. Thank you so much, Lorraine. I appreciate you being here.
Oh, I'm happy to be here, Pam. Anything for you. And when you say, she says she vets us, I can attest to that because she really put me through the ringer. It's okay, Pam. Much appreciated.
Oh, yeah, we have to. And believe me, likewise. But Lorraine, let's dive into, you have so many clients who come to you, not every client, but you have the certification and you have a ton of experience helping people through this process. And, we know that emotionally, so many times people, maybe one of the biggest mistakes that we've seen is when dividing assets and figuring out which assets are which. A lot of times people can get extremely attached to the home. It's the family home. It might be where you've raised your kids, you've got your whole family there, and people want to really hang on and dig into that. Why do you say that being so attached emotionally to the house can be a huge, expensive mistake?
Well, I think a lot of times we let our emotions rule the direction that we take when it comes to the division of assets, and that is not the way to go about doing it. And I'll tell you why the house is one of the main issues, is that particularly women tend to get attached. It's not a house, it's a home.
Right.
It's where you've raised your children. It's where your children want to stay. And so, we found that women tend to sacrifice other assets just to keep ownership of the home. But what happens often is that in taking that ownership of the home and foregoing other kinds of assets, you become what I like to call house poor. You have this maybe wonderful home, but there are not assets that will go into your ability to support the upkeep of that home, to pay the taxes, to pay the insurance. And there are no other additional liquid assets that you can tap in to for living expenses. So having the house as your primary asset out of a divorce is not always the smartest thing. And it really needs to be looked at a little more objectively. I know that we all feel that, it's really important to maintain that continuity and that kind of security for our children, but kids are resilient, and you need to make sure, like they say on the airplane, you put your oxygen mask on first before you put that on your child or loved one next to you. It's the same thing when you're considering how you want to, split up these
Yeah,
assets in a
that's
divorce.
right.
You have to make sure that you're going to be able to function, because without that, everything else falls apart as well.
Yeah,
So
it's
this
like,
is important.
yeah, it's almost like, you're going to have the house, but the airplane's going to crash, not to carry through the analogy,
Yeah,
because you wound up with the house, but it ends up tanking you. It's too heavy of a weight. You
it's
can't really
too
handle
much.
it. But also, isn't there another aspect to this too, Lorraine, where you're looking at the assets and let's say that you are being, you're looking at everything and trying really hard to look at everything from the value point of view, cash, money. If I sold the house, it would be worth X or Y. When we focus on things that we assume are our biggest assets and we haven't taken a true inventory, there's a couple of things there, examples of where someone may not realize that there are other assets that
Yes.
they don't know about that are, no, I don't mean they're hidden per se, we'll get to that.
Yeah, we'll get to that.
But I mean, splitting up, for example, valuable assets, benefits at work. So let's say that
Yeah.
you are a stay-at-home mom and
Right.
that you've been raising kids, and then you kind of check out of what's happening to your partner, your spouse at work.
Mm-hmm.
And we know that there are benefits and that could involve employee stock options and pensions. So in addition to hanging on to that idea that the house is the big thing, do you see
Right.
people missing the fact that, holy cow, those stock options at work are actually
Right.
more valuable than the house?
Yeah, exactly. I mean, you really have to analyze what these assets mean. So let's take a pension, for example. When you look at just the pension in and of itself at any point in time, its value could be maybe $100,000. But you're not taking into consideration the value of that pension after retirement and that consistent guaranteed income over maybe 20, 30 years. I think it's really important for you to get some professional help in valuing these assets and making sure that the split of the assets is not only equitable, but fair. And you want to make sure that you're taking care of yourself into the future. And it's so hard to do when you're going through all of the emotional trauma that a divorce brings with it. But it's a really good idea to try and do it as best you can with the help, perhaps, of a professional to help you, because
Yeah,
a
it's a really
professional is
good
more
point.
objective about what it is.
Yeah, it's a really good point because equal does not, whether it's estate planning or whether it's divorce planning and splitting of assets, equal does not always mean fair.
Fair, right?
But Lorraine, on the debt side, let's go over
Yeah.
to the,
Oh,
we owe money side of it. Couples
right.
have commingled their finances over a lifetime. They've got
Mm-hmm.
mortgage together, they've got credit cards, you have debts, your spouse has debts together, yours, mine, and ours. So what's the absolute takeaway about who's on the hook here and what people need to do to avoid, this is mistake number 3, one of the biggest mistakes?
I mean, if you are on a credit card with your former spouse, you are liable for that debt. So if, as much as you say, well, it's going to work out, he's going to take care of it or she's going to take care of it, doesn't always happen. So the one thing you really need to make sure is that you get your name off of everything that's held jointly. Get out of any credit cards that you have joint. Get out of any other student loan debt that may have been, consolidated and you both signed off on it. You're liable to pay that if your spouse does not pay that debt. So whatever you can do, it's important to close out all joint accounts of any type possible, whether it's a credit card account or even a bank account. you definitely want to make sure that those things are out of the picture before the divorce is final.
Yeah, and you know what? That might be obvious to people who are going through a really, a lot of conflict, and they haven't been getting along with their spouse anyway. But it can be tricky, because I had a girlfriend who was telling me about how her divorce at the time, was super friendly. Like, they really co-parented well, and they got along well, and they always managed their finances pretty well, harmoniously together. So she allows one of the credit cards to stay open because he's going to go forward into the future, and he wants to use that a little bit here and there. She says, fine. He ends up wanting to start two businesses. He maxes out that card, can't pay it back, and it's on her. And now they're not friends.
Absolutely. You're on the hook for it. And the fact is, we don't have crystal balls. We don't know what the future is going to hold. You don't know if your ex-spouse is going to remarry. Maybe you have a great relationship, but the new spouse isn't too happy about you having a great relationship. So, there could be trouble down the road that you don't foresee. Protect yourself before you get there.
It makes sense. Okay. Yeah. Not closing all your credit accounts and your debt accounts together is a big mistake to avoid. That's mistake number 3. So moving on to mistake number 4 of 5. This is tricky. I mean, nobody wants to have to become, join the CIA or enlist the help of a detective. But, people in the real world sometimes do, especially when couples grow apart over time. They kind of wind up squirreling away money here and there, accounts, real estate, all kinds of things. So how big of a deal is it to discover hidden accounts and hidden assets?
It's really important, because once the divorce is done, it's done. So if you haven't taken the time to find out if there are hidden assets, if you haven't taken the time to look through tax returns, or get maybe a business tax return from your spouse to see where there could be possible other accounts or other money or other assets, then you have no recourse to really, unless you want to go through a big legal thing again, which most of us don't. We want to, not go through it again. You definitely want to make sure that you find those assets and include them in the divorce proceedings. So it's difficult to do on your own. And I always recommend that if there's a possibility of having those kinds of assets that you may not be aware of, to go out and hire a forensic accountant. These are people who specialize in finding hidden assets, and they know how to do it. They know how to go about doing it. So it's worth the money to hire a professional to find those assets for you if you have any concern or question about whether your spouse is revealing everything that's there in the marriage and in that pool of assets.
And I'm sure that in a practical world, when there's not a lot of money on the table, then you're spending that money, and you have to judge it based on what's at stake here.
You do have to judge it, yeah.
With you, if someone is working with you, and I think a lot of people don't realize or recognize that they think that their lawyer is going to do a lot of what you do, and the lawyer does not do that. So when they bring you into the team, if you will, it sounds like, oh, dear God, I'm bringing on another expense I can't afford here, let alone a forensic accountant. But the reality is that if you're working well and you've chosen well, you should actually be able to save the attorney time and money. And the forensic who comes in, the forensic accountant, if it ever got to that point, also would be, saving money and saving time, and obviously reducing stress. But you can work as part of that team, you work closely with the attorney, correct?
Oh, yes, absolutely. Yes. You need a team. Because, the attorney understands the legal part of it. The forensic accountant understands where assets could be. An advisor like myself understands the value of certain assets and how to really make that division equitable and fair to both parties. So, when you have a team like that, you're going to have a better outcome.
Yeah, because I'm the last one Yeah, I'm the last one in the world who's going to suggest that anybody spend money unnecessarily on anything
Right,
that's already
right.
traumatic and it's already expensive.
Yeah.
That's the last thing I want to do. But I do want to point out that when you have this, potential team, your attorney, financial advocate, financial advisor who's helping you through this, and then
Mhm.
if you needed it, you needed to call for help above and beyond, then bringing in a forensic account because things are sophisticated and complex. Okay, Lorraine, I promise this is a recap, so we're going to kind of do speed dating here. So on the next one, the fifth out of five biggest, now we're on five, is, I think, really, truly, it could be, hold on one second, just one sec, I have to stop. Sorry, just one second. We'll have to cut that out somehow. I don't know what we're going to do here. I'll have to figure that out. Let's just do it over again. I'll have to ask Louis to edit that. Let me go to the viewer view, and I will just re-ask that question. Okay.
Go ahead. Yeah.
So Lorraine, now we're at the point where we're recapping. I promised it would be a recap, and we've got the five biggest mistakes. So number 5 out of the 5 is one mistake that I've seen with people, friends who have gone through this, etc., where after you get the divorce settlement agreement, everything's laid out, and it's been such a traumatic experience, then it's natural that you're going to want to take that document and throw it in your nightstand drawer, never to be seen again. And your attorney will do their best to make it clear that there are conditions and timelines and deadlines that have to be met. But on something like a QDRO, for example, I've seen cases where, my friend didn't understand that she had to be the one to follow up with the administrator to get the 401k. The attorney's long gone. You've paid the attorney's gone. So
this is true. This happened recently. I had someone come to me, it was after the divorce, and we were looking at her settlement and what she got. And I said, oh, well, have you really asked about where this account is? Because they had been sending her $1,000 out of it. And she was thinking, oh, everything's fine. She comes to find out the QDRO had never been processed, and they were just paying her out, and the account was still in her ex-spouse's name. So, don't linger. Some of these divorce settlements also have future payouts that are due. And if you
what about things to do with custody as well?
Oh my goodness, custody. And I mean, it's complicated. And so to ignore the terms of the divorce, the actual legal document, and fulfilling those terms of the divorce can mean that you're missing out on all kinds of things that need to be done and should be done and actually must be done.
Right.
So, be sure that you really understand completely. Take the time. I know, look, no one understands that better because I've seen it 100 times. Divorce is painful. You want it, you just want the pain to be over. You want to get rid of it. And if you just take the time and make sure that everything is done properly, then you will save yourself a lot of heartache in the future. Yeah. So as painful as it is.
It's so true. I really think that it's not like intentional that someone doesn't pay attention. It's literally that so many people think, well, my attorney is going to tell me. Your attorney is long. You already paid your attorney. They're calling. So let me just run through the 5 really, really quickly, just to recap. Number 1, biggest mistake people go through during divorce that costs the most money: getting too emotionally attached to the home and not looking at the house like it really is an asset. Number 2, not realizing the value of benefits that your spouse may have at work and undervaluing those assets. While it could work out that the stock options that your spouse has are worth more than you thought your house is worth. Number 3 is make sure you close all your credit and debt accounts, no matter how friendly your divorce might be, so that you can't continue to use the joint credit in any way. Number 4, if there are any suspicions of hidden assets, consider bringing in a forensic accountant and really taking a look and acknowledging that there could be accounts you don't know about, especially if you've been off, living separate lives for a while. And finally, Lorraine, the last one you told us is, making sure that you pay attention to the divorce agreement conditions, deadlines, and terms so that you're in compliance and you don't miss something really, really huge. And I think that, like you said, with so much on your mind as you're going through, this kind of an experience, my gosh, I mean, these are the things that, you have to kind of have in mind at the top of your mind. That's never easy. But I just want to thank you so much for going through this recap with me. We're going to be posting this on WealthRamp, and then we promise to email you ahead of time for next month's Wealth Builder series video. And if you have any questions for Lorraine or for me, or if you want to suggest any topics for the future that you want me to focus on with one of our expert advisors, specialists, please let me know. It's askpam@wealthramp.com. And Lorraine, you can be reached at
Lorraine@bettermoneydecisions.com.
Exactly. All right. Well, thanks so much, Lorraine. I really appreciate it as always.
Oh, you're welcome. It was
Yeah.
a pleasure, Pam. Thank you.
You too. Thanks.
Bye.
Bye now.